Welcome to video on sample problem 4. This relates to chapter 2, which is gross income and exclusions. This sample problem focuses on Social Security as income and what's taxable portion of Social Security benefit. This problem is very simple, but yet you can get things wrong if you're not careful. The problem reads, Robert Oldman, age 66. Right away, what comes to mind? That the taxpayer is 66 years old, which means more than 65, and 65 years of age or older or blind. What's the second thing that comes to mind? Is entitled to an additional standard deduction amount. For the year 2019, this additional standard deduction amount is how much? $1,650 for unmarried taxpayers and $1,300 for married taxpayers and surviving spouse. Taxpayers who are both 65 years of age or older and blind are entitled to 2 additional standard deduction amounts. So you would double the additional standard deduction. So then check the appropriate box on Form 1040. And when you get to the standard deduction amount on line 9, don't forget to add in the additional standard deduction amount. Back to the sample problem. During the year, Robert had the following items of income: interest from Bank of America and City of Dacula bonds, as well as dividends, Mad River Canoe Company. All ordinary dividends but not qualified dividends. Let's start with interest. Any taxable interest or tax exempt interest, we call any type of interest that's tax exempt. It would be municipal bond interest, right? And on here, the City of Dacula sounds like a municipality to me. That would be tax exempt interest. Dividends. Recall that all dividends are ordinary dividends. Some ordinary dividends may be qualified dividends. In this case, there is no qualified dividends. Therefore, you could obtain the tax based on line 11b, the taxable income amount. The amount on that figure, look that up in the tax table in Appendix A along with the filing status, because we don't have to worry about qualified dividends and use the qualified dividends and capital gains tax worksheet. We can go to the tax table directly to obtain the tax amount for line 12A. So far, all income items on the sample problem. And another one, Robert also received Social Security benefits during 2019 of $18,000. And we know that income is taxable from whatever sources derived unless specifically excluded. In this case, it is taxable. But the question is, how much of it is taxable? On Form 1040, line 5A is Social Security benefits, and that's $18,000 as given in the problem. Line 5B is the taxable amount, the portion of the Social Security benefits of $18,000. How much of that is taxable? That's what we need to figure out and report on line 5B. Let's first learn about the Social Security benefits. Some taxpayers may exclude all of their Social Security benefits from gross income, likely the low-income earners. However, most middle-income and upper-income Social Security recipients may have to include up to 85% of their benefits in gross income. So let's say $10,000, $8,500 of that would be taxable, would be part of the gross income to be taxable. The formula to determine the taxable Social Security income is based on what's called modified adjusted gross income. We have AGI, now we have MAGI, modified adjusted gross income. It's not that complicated, it's just basically AGI, but then you have to modify it, meaning that you add back the tax-free interest income. So you know with AGI, you don't include tax-free interest, municipal bonds. But in this case, you would include tax-free interest. So take the MAGI plus 50% of Social Security benefits, compare that to these base amounts for the specific filing status, compare And if it's less than the base amount, it's excluded from income and is not taxable. Determining the amount of Social Security benefits that's taxable income is somewhat complicated, as you will see in this table 2.4. The amount of income to include as part of taxable income is based on the filing status, based on the taxpayer's modified adjusted gross income amount plus half of the Social Security benefits amount. Look at the range of that and then determine the amount of Social Security that is included in the taxable income. So if the MAGI plus half of Social Security benefits is under the range of $25,000, then there is no Social Security benefits to be included in taxable income. However, if the MAGI plus half of the Social Security benefits, whatever that amount is, and it falls in this range between $25,000 and $34,000, then the amount of taxable income is the lesser of half of the Social Security benefits or half of the MAGI plus half of the Social Security benefits that's over $25,000. So it's the lesser of either of the two. Now, if it's over $34,000, then it's the lesser of either 85% of Social Security benefits or the lesser of the box above, which is here, or $4,500 plus 85% of the MAGI plus half of Social Security benefits that's over $34,000. Now you get my point that it's pretty complicated, right? The calculation for married filing jointly is the same but utilizes different number for the threshold and the range. The calculation could be aided by using what's called a simplified taxable Social Security worksheet. It lays out the calculation I just talked about in a series of steps. For example, line 1, you enter the total amount of the Social Security income, and then line 2 is taking 50% or half of line 1, the income. We will use this worksheet for the sample problem, so here it is. The worksheet is used to help us with, again, lines 5A and 5B. On here, line 1, Social Security benefits. How much is that as given in the problem? That's $18,000, right? And we had reported that on line 5A already. We're trying to determine 5B. So $18,000 goes on line 1. Line 2 is to take half of that as per the formula to get the amount of Social Security benefits that's taxable. That's what we're trying to figure out right now. Input the half of line 1 here. That's $9,000. And then line 3. What that's trying to do is get the income. We need to compare the income to the base amount. So income on line 3 will total $23,950. Then on line 4, we enter any amount from line 2A of Form 1040. That is the amount of tax-exempt interest, right? $2,500 there, because we want to add this back. And line 5, that's what it's doing. That determines the amount of modified adjusted gross income. MAGI goes on line 5. That's $35,450. Line 6 is to enter the amounts from Schedule 1. But we don't have any in this problem from Schedule 1. Therefore, it's 0 or blank. Line 7, that's just the carry down from line 5 because we have none in line 6. Line 8, depending on the filing status, we will enter the base amount. It's either $32,000 or $25,000, or we skip it. In this case, it's $25,000 as the base. For your reference, recall the base amounts when we look at this slides here. Here's $32,000 for married filing jointly, $25,000 for all other taxpayers. We compare the amount of modified AGI plus half of the Social Security benefits. We compare that to the base, okay? And benefits are excluded from income if it's less than the base amount. Continuing on. Line 9 asks, is the amount on line 8 less than the amount on line 7? The answer is yes. Line 7 is $35,450. That's the MAGI. We compare that to the base on line 8. That's $25,000. And so the difference is 10,450 goes on line 9. Line 10, enter 12,000 if married filing jointly, 9 if single. In this case it's single, so we enter 9,000. Let's jump down to line 17, which says multiply line 1 by 85,000. What is line 1? Line 1 is the Social Security benefits, 18,000. That's the income that we're trying to determine how much of it is taxable. So we multiply it by 85%, and so line 17, that is the max that could be included in taxable income. A quick look back at the slide here. Maximum inclusion amount, 85% to be included in gross income to be taxable. Back to the worksheet. Line 17, 85% of line 1, the Social Security benefits, is 15,300. That's the max amount of income that's taxable to be included in gross income to be taxable. Line 18, enter the smaller of line 16 or 17. So if line 17 is the max, line 16 could be up to the max or smaller. In this case, it is smaller. It's 5,733. It comes from the calculation that's done based on these instruction lines here. So line 18, the answer is 5,733. Now, I didn't go over these lines, but you can do that on your own. Basically, it does the calculation using the formula, but in the form of instructional lines on this worksheet. Line 18, 5,733. It says enter this amount on line 5B of Form 1040. So I enter 5733 here on line 5B. And once again, line 9, don't forget the standard deduction. You must also include the additional standard deduction amount of $1,650 based on the filing status. What is this individual's filing status? Input the appropriate check mark. Then there's not much on page 2 in this sample problem. Figure out the tax based on the taxable income on line 11B. Don't forget to do Schedule B. There is interest and dividends in the sample problem, right? And that's why Schedule B is required, and it's required because it's above $1,550. And it's required because there's dividends and interest that's more than $1,550. Please complete this form completely, accurately, and timely for submission by the due date.